So, how on earth does a company have its best year ever? Today, we're going to tear down how the insurance and investment giant Fairfax Financial did just that, posting absolutely record breaking profits in 2025. We're going to deconstruct the two-engine model that powered this incredible success story. I mean, you don't often hear a CEO just come out and say it that plainly. When Prem Watsa, the head of Fairfax, says it's the best year in our history, you just know the numbers behind that statement have to be huge. So let's get right to the big one. And there it is, nearly $4.8 billion in net earnings. Now that's a staggering figure all on its own, but to really get why the CEO is so hyped, you gotta see where they were just a year ago. This is what's just incredible, the jump. Fairfax went from an already massive $3.9 billion in net earnings to $4.8 billion in just 1 year. That's almost $1 billion leap. Now you can see why they're calling it their best year ever. So the big question is, how does a company generate that kind of profit? Well, for Fairfax, the secret sauce is this really powerful two-engine business model where both parts work together perfectly. We're going to break down both of those engines for you right now. All right, let's start with engine number one. This is their core business, right? At the end of the day, Fairfax is an insurance and reinsurance company. This is their day job, collecting money, premiums from customers to cover their risks. But here's the real question. Are they actually good at that day job? I mean, is the basic business of selling insurance actually making money on its own before they do anything else with all that cash they collect? To figure that out, we've got to look at a really key metric. And that metric is called the combined ratio. Now, it sounds complicated, but the idea is actually super simple. It just measures how much an insurer has to pay out in claims and expenses for every single dollar it brings in. The magic number here is 100%. If your number is below 100, you are officially running a profitable insurance business. So, what was Fairfax's number for the year? A rock-solid 93%. Now, let me tell you, in the insurance world, that is an incredibly healthy figure. This proves their main business isn't just treading water. It's a seriously profitable operation all by itself. Okay, let's put that in even simpler terms. For every single dollar Fairfax brought in from customers, they only had to pay out 93 cents to cover all the claims and their own costs. That means the other 7 cents from every dollar, that's pure profit from just doing their job. And, when you're a company the size of Fairfax, that 7% margin adds up to, this, a record $1.8 billion in pure profit from insurance. That's engine number one, just firing on all cylinders. But believe it or not, that's only half the story. Okay, so what happens to all that cash, all those premiums that are just sitting there before they have to be paid out for claims? Well, that's where engine number two kicks in, the investment machine. And you could argue this one is even more powerful. And the fuel for this second engine is something called float. This is the real magic of the insurance business. It's this gigantic pool of cash that an insurance company gets to hold on to. It's all the premiums they've collected, and they get to invest it for their own profit until it's eventually needed for claims. Think about it. It's basically like getting a massive, interest-free loan from all your customers. And the size of Fairfax's float, it's just mind-boggling. Over $39 billion. Just let that number sink in for a second. That's the amount of capital they have to play with in the markets, all generated by their first engine. So, what did they manage to do with that nearly $40 billion war chest? Well, in 2025, they generated an additional $3.2 billion just from their investments. I mean, that is the incredible power of engine number two. Okay, so now let's put it all together. You've got engine one, the profitable insurance business, which is just churning out cash. That cash then fuels engine two, the massive investment machine, which generates even more cash. Let's see how that looks when you put it all on paper. All right, this table really lays it all out. You can see the operating income from insurance right at the top. Then you add in the net gains from all those investments. And on top of that, another $2.5 billion from interest and dividends. You add it all up, and you get this massive pre-tax earning of over $6.4 billion. After taxes, that's how we get to that final $4.8 billion in net profit. It's the two-engine model right there in black and white. I mean, a record year is amazing. But in the world of business, the question is always, okay, what's next? A company with this much profit and this much cash on hand isn't just going to let it sit there. So where is all that capital going? Well, the report shows they are not messing around. They're making some really aggressive moves. First, they're investing in themselves, spending $1.6 billion to buy back their own stock. Next, they're unlocking value in their other companies by taking one public. And they're not shy about making huge acquisitions, like putting up over $1.5 billion to help buy a real estate company. It's super clear they're putting that record profit right back to work. And all of this leaves us with one final big question. In 2025, everything went right. Both of Fairfax's engines were just humming along at peak performance, the insurance side was super profitable, and the investment markets played along nicely. So the ultimate question is, can this incredibly powerful two-engine model, the one that created their best year in history, keep firing on all cylinders and navigate whatever challenges 2026 decides to throw at them?